But yeah, that's the sheet that I went through from the podcast for those that didn't actually watch the video. Um, Comments coming in. Yeah, people seem to think that I don't like real estate. It's a bit strange. I invest in real estate. I have a portfolio myself. So, it'd be crazy for me to say that, I don't think someone should invest in real estate, but, it depends what you want and, where you're at now. When someone asks you my opinion, I would always say, one, it depends on where you're at. Are you building long-term wealth? Is this a long-term wealth creation play, or do you want income for lifestyle like right now? Because there's a big difference. Most people say they want both, which in that case, I think that you need something that throws off income now. You need something that produces income, which has a large surplus, so you get to reinvest it. That's in any asset, whether it's real estate, crypto, stocks, or whatever. But most people, the one thing that most people usually miss out when they invest in real estate or they're thinking about investing in real estate. There's only actual three ways that you can build a substantial real estate portfolio, and especially if you want to do it quickly, which is very hard to do it quickly. But if you really wanted to build a substantial portfolio, there is only three ways. One, you either inherit a large amount of money. Two, you're very good at raising money and you have a large investor network, which is an amazing skill set to have. Or three, you have a very good business that throws off a lot of money. And I have friends in the industry that's done used all three of those ways. Usually, two or three. So either they're good at raising money, or they have a business that throws off a large surplus that they reinvest into it. The best real estate strategies are very capital intensive. For instance, if you look at HMOs, flips, commercial to residential, ground up developments, all of them require a lot of capital up front. So yeah, I can see here's a few people here that are doing in HMOs, BRR, development. Yeah. But yeah, if you look at the best income producing strategy, and obviously taking ownership into consideration, it probably would be HMOs. There's huge demand for them. It doesn't look like that's changing anytime soon. But first of all, there's no cheap or budget way of doing it. Competition is now very high. And like I said, I have friends that are doing this very well right now. And I think it is a great strategy, but you do need to get it right. And you do have to have the bank to get started, and also definitely educate yourself before you dive into it as well, because it only takes one thing to go wrong and it can be quite drastic as well. Yeah, BRR. So I see someone here that in buy to lets, but even on those more budget strategies, the straightforward buy to let strategy, is almost not even worth it. I'm speaking from experience. We were buying one a month before COVID, sometimes two a month. Granted, we did pick South Wales, which, wasn't the most desirable places to buy, but there were some great, ROI opportunities there. But look, if you find something that throws off good income and then you can use the surplus, then of course reinvest it back into real estate. There's a lot more room for error then, a lot less pressure, and along the way you're actually making money as well. So, of course, it's a great strategy and it's great for wealth preservation. Of course, if you do have the pot or you do have one of the skill sets that I mentioned, then you can go out there and you can build a really good portfolio, a really good income producing portfolio. I have friends that are making incredible money in, HMOs, flips, commercial to residential, even ground up development. But guys, it is very capital intensive. So let me just have a look at these comments. So comment from Huncho Al, property is a good way of saving. Yeah, I agree. Like I said, it's a good way of preserving wealth. It is a bit like a savings account. But if you look at like the real wealthy individuals out there, they're not looking at how much they can save. They're figuring out how to make that money, multiply, how they can be more productive with it. So if you're sat there with, 20 million in the bank, or north of 20 million in the bank, then sure, there's you can look at ways to protect it, preserve it. But it really depends on, where you're at in life, what's your risk appetite, what's your time horizon. It really comes down to your, individual circumstance. Next comment from AP650, why business over everything else? Um, Look, I think it was Tony Robbins that talked about the difference in I think it was the difference in, if you throw $1 million into the stock market, over 30 years or so, it'd be worth over $30 million today, which obviously is a great return on investment, even if you did take inflation into consideration. But then he also mentioned if you put that same $1 million into private equity, then it would be 10 times that. So, over $130 million in the same time frame. And look, Harvard's endowment fund allocates 34% to private equity as well. Like, it's no secret that you can really amplify returns when it comes to business in general. But when you buy businesses and you buy in that income, then it is a game changer. Comment from Jay Singh. What else apart from buying businesses can you earn more than property? Honestly, guys, there's so many things, you could probably buy one car on finance or a van on finance, rent it out, and it wouldn't surprise me if it made more money than a buy-to-let investment property. Like, seriously. Yeah. Um, Actually, I don't know. Let's look at it right now. We got some time. Let's look at it and let's model it now. Let's see if buying. We'll use a van because it's a commercial vehicle, and they're in probably. I suppose they're both in demand, but let's just use a van, a small van. Let's see if the van makes more money than a buy-to-let investment property. And let's use this same sheet. So, we have the sheet here. Let me pull it back up. So we have the sheet here. We have an investment property here, and this is using 100,000 from an investor. So, we'll take this into consideration. Let's blank out this side and let's replace this with a van. Okay, so let's put van finance in here. So let's say that we're going to finance the van. We'll put a column for, yeah, we'll put a column for insurance. We'll put the total, and then we'll put the annual figure there, and then we'll put 5-year costs in there. Then we'll put the van rental per day here. So how much it costs to hire the van per day. And then we'll put an occupancy rate, let's say 20 days in there, because I think that's fair. So, we're not maxing out every single day. And then we'll put the 5-year revenue and then the profit. Okay. Let me switch my other screen a sec. I'm just going to pull up some websites. So we'll go for Auto Trader. We'll use 60 for car rental. And let me pull up a finance calculator. Which one shall we use? We'll compare the market. Okay, so let me pull these screens fairly close together. So just make sure we're doing this right. Okay, so cool. Let me share my other screen. Right, so first of all, let's look for something near Bristol. So let's use a Ford van. So we'll go for Ford. We'll go for a Transit Connect. And let's find one. So, okay, let's make this a little different because we can't have something. Let's go for 2023. We don't want anything too cheap. We need to be sensible. Okay, cool. So let's just say £24,000 here. That's 73 reg, and it has 10 miles on it. So let's go to our finance calculator. Let's say we got £5,000 to put into this. So we need to raise 19,000 in finance. We'll do it over 5 years. Let's keep the APR the same as it is, and let's just keep everything as it is on the screen so we don't change anything. So we're going at the average. So we got £399 here. So let me just quickly pop that into the sheet. Insurance, let's say we're at, let's say £220 for insurance. And then we'll do the total. So that comes to £519 a month. And then we will times that by 12 for the annual. And then we are going to times that by 60 for the 5 years. Oh, that did not work very well. So we're going to do that again. And then we are going to times that by 60 for the 5-year figure, which comes to 31,000. So we've got 5-year costs in here at 31,000 for the van insurance. And I'll come back to that screen in a sec. So that's that. And let's have a little look at what the daily rate is. So we'll just type in, I'm in vans, let's see what's available for a day. So, okay, so the large transit here is £62. And then we got a medium transport here for 50. We're not going to get vans for much less than, say, £50 a day. So let's, we'll put £50 a day. Okay, and then let's look at let's times that £50 by 20 days, which is £1,000 a month. And then, of course, we are going to times that by 60 months. So that's £60,000 over the 60 months. And then the 60 take away the 31,000. So we have £28,000 profit. Oh, I forgot to share my screen back to the other one. So you should be able to see. Guys, can you just let me know in the comments if you can see the spreadsheet? Cool. Yes, you can. Okay, so right. So if we rent this van out £50 a day, we get it for 20 days a month. Then that's £1,000 per month. And of course, the total per month here in van finance and insurance, if we can quite conservative there, you know, £519, we possibly get some better deals out there again. But we've just used this, made a load of assumptions, looked at just the average here of what we found online. And yeah, so our 5-year cost is 31,000, 5-year revenue is 60,000. We leave a profit of 28,000 over 5 years. If we use this exact same model that we used for the investment property, the sheet that we started with, over 5 years, you would make 10,000. Now, of course, there's a lot of assumptions here. You know, of course, for the cars, to go and buy a van, for instance, or a car and rent it out, of course, there's going to be, you know, advertising costs, etc., associated with actually, you know, getting customers. But of course, with the property, we're making a load of assumptions here that, you know, there's nothing goes wrong. And of course, there's going to be tenant finding fees in a rental property as well. So there's a lot of assumptions to be made on both. So, you know, these are real like ballpark figures. But as you can see, we've just gone through the comments and we've looked at, you know, are there other options out there where you can make more than, say, a buy-to-let investment property? And like I said, a lot of assumptions, and there's loads of different strategies out there. And this is not me knocking real estate whatsoever, as I've, you know, said many times over this stream. But look, guys, this is one van. You know, this is obviously base figures, like I said, but one van with insurance. Of course, there's, like I said, more costs associated with it, but ballpark figures in £28,000 in profit off one van over 5 years if we use these figures. And for the same thing for an investment property, if you usually take 100 grand off an investor, you're going to make 10 grand over that same 5 years. So look, you make your own minds up. You know, there's many things out there. You can go and do so many things today. There's loads of people teaching so many different things online. So go and get educated. Go and find someone that you resonate with, whether that's Forex, whether it's, you know, buying businesses, whether it's buying property, whatever strategy you pick, whether it's deal sourcing, whether it's drop shipping, whatever it may be. There's so many different things out there right now, but I would just say focus on one thing, Focus on the thing that's going to get you to your goal. Everyone's got different goals. Some people want to go and work remotely and go nomad. Some people want to build where they're currently located at the moment. Some people have families, some people don't. Everyone's going to have different circumstances, guys. Some people's going to start with money, some people aren't. But first of all, whatever it is you decide to do, make sure you get educated. But yeah, I hope this has helped. There's actually been an interesting, um, uh, quite an interesting bit of research, really. Yeah, quite interesting comparison. So that's the word I was looking for. Um, I'm glad I actually recorded this. I might actually post this on my YouTube. But yeah, guys, look, I'm a couple of minutes over, so this is quite cool. I haven't done one of these streams before, so yeah, may do another one soon. But yeah, guys, thanks for the comments. It's been really interactive. It's been pretty cool. And yeah, I'll see you next time.